Welcome, everyone, to Daily Bread with Tom Hartman. Today, for October 14th, 2025, we look at today's top stories. Topping off the list, we have the Trump President Xi scheduled trade meeting to discuss deal per White House. So this comes from Watch Guru, who shares a post that says that President Trump and Chinese President Xi Jinping schedule a meeting to discuss trade, White House official confirms. This is supposed to alleviate the concerns that we had last week when Donald Trump basically declared another trade war, part deux, on China, and that caused markets to fall precipitously. But what we didn't see is even though markets recovered about 50% of the fall that it had last week, it did not recover all the way. So either that is speaking to the markets not really believing what Trump is saying, or that just walking it back for markets, or that markets were already weak and that the blow that happened last week would have happened on any particular news and we're slow to recover, maybe making a lower high. Hard to say. We are smack dab in the middle. Could be consolidation, could be overbought, could be oversold. We don't know for sure. We have to wait for more price data in order to let us know. What we do know is that we are past the window of weakness from quarterly OPEX in September, headed into quarterly OPEX for December and end of year. So we'll see if there's anything major that happens then. But generally speaking, the holidays, nothing happens. The Santa Claus rally happens, and we move forward pretty happily. But if this is the beginning of the of the drop in the markets, I for one would be very surprised. Our next story is from Powell, our buddy High Priest Jerome Powell from the Federal Reserve. Powell eyeing QT halt in months, softer monetary stance supportive for growth and asset prices amid easing cycle. So this is from Bloomberg TV. We have here a post that says Federal Reserve Chair Jerome Powell says the central bank may stop shrinking its balance sheet in the coming months during an event with the National Association for Business Economics in Philadelphia. Let's hear what he has to say here.
Our long-stated plan is to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserves conditions. We may approach that point in coming months, and we are closely monitoring a wide range of indicators to inform this decision. Some signs have begun to emerge that liquidity conditions are gradually tightening, including a general firming of repo rates, along with more noticeable but temporary pressures on selected dates. The committee's plans lay out a deliberately cautious approach to avoid the kind of money market strains experienced in September 2019. Moreover, the tools of our implementation framework, including the standing repo facility and a discount window, will help contain funding pressures and keep the federal funds rate within our target range through this transition to lower reserve levels. Normalizing the size of our balance sheet does not mean going back to the balance sheet we had before the pandemic. In the longer run, the size of our balance sheet is determined by the public's demand for our liabilities rather than by our pandemic-related asset purchases. Non-reserve liabilities currently stand about $1.1 trillion higher than just prior to the pandemic, thus requiring that our securities holdings be equally higher. Demand for reserves has risen as well, in part reflecting the growth of the banking system and the overall economy. Regarding the composition of our securities portfolio, relative to the outstanding universe of Treasury securities, our portfolio is currently overweight longer-term securities and underweight shorter-term securities. The longer-run composition will be a topic of committee discussion. Transition to our desired composition will occur gradually and predictably, giving market participants time to adjust and minimizing the risk of market disruption. Consistent with our longstanding guidance, we aim for a portfolio consisting primarily of Treasury securities over the longer run.
All right. So that is beautiful Fed speak designed to confuse people who don't really pay attention to what the Fed does or what they say. Given an appearance of measured control, being very deliberate, being very careful. The reason for that is not to add volatility to people's decisions. People don't want to think that the Fed is just acting willy-nilly and that they're making decisions on a turn of a dime. So here, he's saying this is something we're going to be considering a few months from now, which is letting the they were letting the balance sheet run off, which is a form of tightening. If they're going to ease that, then it'll be a type of monetization, debt monetization, that'll be come back on the table, effectively a type of QE. Now, the way that they say this is we're considering to do this in the future, some months into the future. This allows markets to immediately price in what that would look like. And if that pricing in is positive for markets, then the Fed will just go with it. And it is negative for markets, they will walk it back going, hey, you guys misunderstood. So it's all about this forward guidance game where they're just saying things in order to move the markets before they have to do it. Brilliant game. I don't fault them for it. It's just nice to know that they're doing it so that we can understand what they're actually trying to telegraph. They're not trying to say something later is going to happen. They're trying to get markets to move right now. And finally, the big crypto story of the day is comes from Jacob Kinge, who says, just in, the BTC whale has now fully closed his $500 million Bitcoin short over the past 2 hours on Hyperliquid. This is referring to the infamous whale that opened up a crypto address and account like 30 minutes before Trump's tweet last week, talking about the trade war with China. And that account, I believe, made something like $192 million shorting. I mean, what an amazing short. How coincidental to open up such an account and short by such a large amount. That same account then went short again an additional 500 million Bitcoin. And so people were looking for another leg down in markets. But what we've seen now is that $500 million short has been closed. So that address has bought back, has covered their position, and now that type of risk is no longer there. There's other selling pressures that are happening in the crypto space, but at least this is not one of them. A nice little, I mean, I want to say conspiracy theory, but it's not a conspiracy theory. This is what's happening, but no one knows who that wallet is, and there seems to be an investigation underway to figure out what's going on, if it's part of the Trump administration or entities around the Trump administration, because who else would know that he's about to put out that tweet about China. Markets are interesting. Markets are fascinating. But that'll be it for today's daily briefing. We'll see you tomorrow for yet another.